market is going to continue all on down. So we're going to be looking at it, as we look at the prices. You can see that we potentially, if we're a swing trade mode, could get into it. We have the predicted differences are moving up. We get onto that. We get the middle index at 1, although it has been at 0, kind of on the weak side. So it's kind of a mixed reaction. We have no really good, clear trading picture here in terms of what is happening from a swing trading type of a standpoint. When we do want to trade, we want to get in there, we need to get from our previous reference of our trend trade, our longer term trend trade, into a more short-term mode where we might be in, kind of in and out, and that's not everybody's favorite way to trade, but that's kind of the nature that we're giving. As the market does move along, you can see we start to get this little pattern here, and our pattern here. The problem is, again, when you have these little ups and downs, the reactions against them, when you see some of these candles and you look at them and you say, where would you place your stops, where would you enter, is that we have a kind of a situation here that's pretty tricky to trade, because you can get in, and then if you get out with a minimum amount of loss, you're going to take quite a number of in and out types of trades, and it's going to cost you a little bit. In the case of the E-mini, once you get into this mode and you're kind of away from what you expect to be, wanting to be in a trend mode, you want it to prove that it's in a trend mode. Now you're going to switch again, and you're going to talk about 20-point moves that would be enough to enter and 10 points to exit. A little bit of a change. And then even as you move along in the situation here where you're talking about some of the situations here where you're going to look at, well, what's the high of the range? Well, the high of the range is kind of getting established, if we're talking about swing trading mode, is around 1220 or that neighborhood, and the low is around 1100, let's say 1110, because it isn't quite down to 1100 except for that sharp move, at the bottom in August. So that's kind of our range that we're talking about from the swing trading mode, and hopefully we can trade from the bottom of the range to the top of the range in a swing trading type mode using some of our things. But we are going to get chopped up. So an ideal thing here is, and we won't talk about that today, we have another webinar coming up, is that you may want to switch to even going into a day trading type mode. You can see that there are some places in here where the candle, the price reaches right close to that predicted high and moves lower. We'll talk about that in a future webinar, where you have some possibilities for intra-day trading when you have situations that have come up like they've come up recently with the E-mini. Now, in this case, when we do have that, we also may want to add another ingredient to this, and that is that as we get into the market, we want to, or may want to, set up a profit target. We know that, Colby has mentioned that we, may get a little run like this of a few days, but it won't last. We get a little run, we get a little run, but, for the most part, this little uptrends against the prevailing downtrend are probably not going to last. So when we get into it, let's say we get in on the predicted low here and have a short position, we can then set up our stops. We may want to set up our stop. In this case, we may want to go, above that market, above that high rather, and get out there if it does turn around. There are various places that you can do that. You can enter it at different places, but you probably, if you're into the market at all, you probably want to set up situations where you might want to take a profit after it drops. In this case, we had the predicted low was in there, and when that was, I believe it was on September 19th when that predicted low occurred. Let's move this over here. And the predicted low at just barely above 1200 at 1202, and so you would want to be, selling, maybe, narrow your range down. We're talking short term. You may want to sell 10 points below that predicted low to get into a short position and work the way down. And so that each time you might want to have, okay, let's say you get in the market at 1202, what's a good target? Again, in hindsight, you don't know, but you might say, well, we get to the bottom of this range or towards the bottom of this range, and if it gets down to be 1120, I'm willing to get out because I'm not sure how much further it's going to go. we have to have some evidence that we are now swinging back into that trend. We don't want to give up on the trend, but we need some evidence that we have gotten into that trend trading mode before we start trading trend trading type of strategy. At this point, we are still more in the swing trading type of strategy. It also gives you an possibility of staying in the market. Let's say that you get into the market short, you get a big downdraft like you did on this candle right here, and you can say, well, if this you might say, well, it hit a profit target, but I'm just going to put my stop at that profit target now in case the market moves above that. If I get my 20 points or 10 points or whatever your target happens to be, and if it hits that, that's my stop, so that's what I only want to lose. But I'm going to hold my position, and maybe it'll go on further. Maybe it'll turn into that trend. You don't know. In any case, when it gets back above that predicted high, it should be enough to kind of trigger some kind of a stop or placement wherever you have it, and that you would then be out of the market and on the sidelines. In some cases, sidelines is the best place to be. If you're looking at it from the standpoint of where we're at today, you would have not been knocked out in this vicinity right here, that short position had you taken it, because the market would have rallied enough to stop you out, and you would be sitting there kind of waiting for the next move. In this case, that predicted low that we had for yesterday, September 28th, that predicted low would have been, let's see, would have been 11, I guess I don't have it exactly right here in front of me right here, but if it's going to turn around and move up, this predicted high that we had here is 1172 plus 10, if that's the stop criteria you have, and you would buy at 1182. We haven't reached it, or at least the last I saw, we have not reached it, so we would still be on the sidelines waiting for some direction, one way or the other, as to whether to get into a position or not. And as I mentioned, in some cases, when you get this kind of tricky conditions, you need to go to the shorter time frame, even to the intraday time frame, if it is possible, where you fade the high and sell, fade the low to buy. But don't want to get ahead of us and talk about next week's webinar too much. But just to indicate to you that there are other ways to trade, and you may want to trade even a swing trade strategy intraday. Very difficult market conditions to trade in today. Take a look at one other market real quickly that everybody seems to be interested in. Again, this is the euro. It's a 2-month chart of the euro. You know that we had the downtrend, and similar to what we have had in stocks, it seems like the euro and stocks kind of go together like a lot of markets. The euro is kind of the opposite reaction of the U.S. dollar. The U.S. dollar, if it's up, many markets are down. If it's down, many markets are up. So we know that the dollar's been up, so we have the situation where the euro's been down. It had its kind of breakdown. Lots of things happening in Europe. A lot of potential things that could still develop, that could still be an issue in Europe. So again, as with stocks, the preference would be to be on the short side if you had a preference. You can see that we had our downswing. You can see that you should have, if you were trading it on the basis of the predicted highs and predicted lows with your parameters there. In this case, for the euro, it would be 100